Hi there, Andrew Thompson from Position Market Trading. We're going to focus on one of the major currency pair in the world at the moment, which is the Euro US dollar. While we are brutally aware of the happenings in Paris last couple of days, this will directly affect the euro, which in my opinion is longer term is going a lot lower. Borders are closing. The whole part of the premise of the euro is open borders. Now the borders starting to close with the refugee debacle, and now this attack by these cowards. I think it's just going to get worse for the euro. This is a bit of a longer term chart. I'll show you where we've been trading over time up to the present moment. Back in 2012 we had a major low of 120 to the US dollar. If you have a look at my blog, we traded that low and it never looked back. It went up 2,000 pips and it's been going down ever since. Major top back here at 149 to the US dollar, down to the recent low earlier on this year, all the way down here at 105. I want to show you how we picked that nicely. This top to this low, the actual days going down was 447 days. As I said, what you do in one number, whether it's price, time or whatever, will come out another. And then from the same top into this low over here, which gave us a 1,000 pip run, which is basically 50% of the 2,000 pip run, the range was 4477. So as you know, we always move the decimal point. So as far as I'm concerned, that's bang on. That's why we had a bit of a surge out of here. We're coming up to the recent top. Looks like this is it before we break this low. Looks like we're going to parity, if not lower. You've all heard me about my 233, 466, how I love that cycle. It's almost as important as 144 to me. It comes out that well, and the 233 usually brings on powerful, strong reversals, one way or the other. And if you look at this low, this 2,000 point pip range I was talking about, the bars up, the trading days are 467, which is pretty well exactly 2 times 233. And from there across to this recent top over here, the degrees was 463, 464, so that's 2 times 233. Again, you know, I'm not worried about a point here and a point there. I don't look for perfection, just try and look for results. So there's your the traders giving you your solid degrees on the way down. So as far as I'm concerned, that top is the top before we go to parity. Just as a smaller range, the days up from this low to this recent top, the trading days was 116, which is 50% of 233. So a lot of the same number coming out. Beautiful resolution here, which is in the past, no good to us now. But here, I think everything is interconnected. What happens in one member state of euro will affect everything, and then there's a common currency. This is already, you can see how impulsive this is down. It's taken a long sideways move to get up there, and in less than a third of the time, it's 2/3 of the way down. So it's not happy days for the euro. It's not happy days for the world at the moment. So we'll see how this goes. Also, my BHP post on Friday, it's very, very, very strong time at that low. Good long-term time. We had the 90 months from the all-time top. So I'm quite confident on that. I will be a buyer, assuming everything doesn't fall out of bed on Monday. So we'll see how we go. Goodbye for now.